All right, we're live. So welcome back to Dapp University. So today we've got a lot to talk about. All right, the first thing we're going to discuss is the hottest trend in crypto right now that you need to pay attention to. All right, we're going to look at a lot of the news updates that have happened in this space since we did our live stream on Friday. This space is just crazy. Seems like there's always something new to talk about. We're going to check out the cryptocurrency markets, answer some of your questions, and a lot more. So if you're new around here, hey, I'm Gregory, and on this channel, I turn you into a blockchain master. So if that's something that you're interested in, then smash that like button down below for the YouTube algorithm and subscribe to this channel. And if you want to learn how to master blockchain step-by-step start to finish, then head on over to dappuniversity.com/bootcamp to get started today. Last but not least, nothing I'm saying in this video is designed to be financial advice, and there's lots of scammers down in the comment section below. Just ignore them. Like, I'm never going to give you my phone number on YouTube or ask you to give me money. It's plain and simple. All right, so we got people in the chat here. We got Automatic Beats, Crypto Lee, Ann, Francis, another Lee, Clay, Crew, Oleg, Tess, Bruno, Wayne. All right, welcome. So let's go ahead and jump into this. Let's talk about the hottest trend in crypto right now, okay? Because, crypto on the whole is a trend. It's a parabolic trend that's been, taking off like a rocket really ever since the beginning of 2020. I believe we're still on a parabolic trend upward, right? We'll talk about that here in a minute when we talk about the cryptocurrency markets. But we've seen lots of other small trends inside of cryptocurrency, the cryptocurrency space, the blockchain space, Web3 space, whatever you want to call it, that have taken off. All right, so DeFi was one of the first major trends that kind of ignited this bull run, or at least coincided with the initial spark of the big bull run that happened, we're a part of right now, that started in 2020. We've seen NFTs take the spotlight for quite some time as the world has kind of woken up to what's possible with blockchain technology and NFTs as this trend has really bubbled up to, mainstream awareness. All right. And now we're looking at another trend that is really starting to, in my opinion, really take hold and get a lot of people's attention. And the cryptocurrencies associated with this trend are really starting to take off. All right. So what trend is that? All right. So we talked about some on this channel in these live streams that we do Monday through Friday. Just subscribe, turn on notifications down below. You'll find out about those whenever we go live. But we really started to see significant amount of price action over the past week or so around crypto gaming. Okay, so this is one really specific area of crypto that's starting to just take off, and for several reasons, in my opinion. Okay, so we've already had the foundations for this. We've already had the foundations of this for quite some time. Like I said, we've been talking about crypto gaming. We have new models about how you can create games with blockchain that you can't create in any other way. We've seen play to earn take off, like Axie Infinities, for example, ways you can actually earn money to play a game. You can get assets inside of a game that you can take outside of a game. It's very different from other gaming-based or other games that are Web 2 based or just non-blockchain based. Like, it's a complete paradigm shift. But one other big reason why I think that we're starting to see this take off, in terms of like recent events and fundamentals, is what's going on with the metaverse trend, the bigger trend, because gaming is kind of in the umbrella of metaverse. Okay, so last week we saw Facebook rebranding to Meta. All right, so the parent company that owns Facebook. Let's just see. Let me pull it up. So, last week we saw Facebook rebrand to Meta. We talked about this on this channel several months ago, how Facebook was eyeing a big shift in their focus from becoming a social media company to becoming a metaverse company. Okay, so the metaverse is sort of this next wave of the internet that's, developing side by side with Web 3.0. Okay, and I think a lot of people are associating gaming with metaverse. And we saw, Facebook rebrand to metaverse, and this is a kind of a turning point for that entire trend in and of itself, in my opinion. And even if you just search like, crypto gaming right now, you're going to see things come up like articles about, the metaverse associated with crypto gaming. They're lumped into the same headlines. People are talking about them in the same way. And so I think what Facebook did last week is a significant contribution to what we're seeing with the gaming trend. Now, that being said, another big factor of why I think the gaming trend is taking off is because these micro trends inside of crypto, even though gaming is becoming significantly a large trend, right? This is kind of the nature of crypto, where something that has potential that hasn't been hyped up and pumped yet, just kind of in the line waiting to do that, okay? We saw that with DeFi. We saw that with NFTs. We see these little hype cycles come around for all these smaller trends in crypto, and it was really just a matter of time before gaming took the spotlight. And I think that's what we're seeing right now. But I do think there's a lot of potential for the gaming space in crypto beyond just hype, right? Beyond just speculative hype. The entire crypto space is like that, in my opinion, where some people think it's all just hype, but there's plenty of fundamentals behind this that can actually support the prices for these projects. And this is not actually gaming chart. Let me pull it up here. This is gaming chart. This is what I was looking for. Okay, because that's always a long-term thesis on this channel is for any cryptocurrency to have value, ultimately they're supply and demand-based assets. And as you create technology that gives people reasons to want to use it, insofar as the cryptocurrency is actually linked to that, it's like you need the cryptocurrency to use this technology, that as more people use that value can actually accrue to the cryptocurrencies themselves. And that's what I'm looking for in these gaming projects that have solid fundamentals, long-term value proposition, because that's where I think the valuable crypto is going to be. Now, I don't have any like top gaming picks or anything like that, but it's definitely a sector to keep an eye on for sure. Now, speaking of gaming, or just in crypto in general, kind of what's going on with prices. Well, let's take a look at what happened, what's been going on with overall cryptocurrency markets. Somebody says DeFi led into NFTs, NFTs led into gaming, gaming leads into metaverse. What is next? I don't know. That's a comment in the chat here. Yeah, I think metaverse could be a logical extension of gaming for sure. Okay, so let's kind of take a look at what's going on with overall cryptocurrency markets. We can take a look at some of the majors here. Bitcoin, Ether. I definitely think what's happening kind of between these two is significantly having an impact on the overall cryptocurrency markets in terms of just general direction. So Bitcoin. We. Let's see here. Hopefully the chart will actually load. So a couple things about Bitcoin is we had the highest monthly close ever, which is pretty bullish for Bitcoin. We didn't, we broke a new all-time high on Bitcoin. We didn't immediately rocket off to new price levels like a lot of people were anticipating. We're seeing, some resistance around here, a little bit of a correction. But some important things to understand is that basically whenever we corrected, we essentially held about $60,000 as support. I mean, we dipped down a little bit here, right? But, give or take, we don't see things dipping below $60,000 or more. So that's kind of the next price level I'm kind of looking at to see if it holds, to understand the next kind of, 3, 4, 5, 6 weeks. That being said, generally speaking, I'm leaning in the direction of seeing higher prices over the next couple months for Bitcoin and the cryptos. There's lots of reasons I think that. I think the trend is still parabolic and still headed upward. Okay, I think people are hungry for gains. I think that a lot of cryptos are undervalued relative to what's actually happening on the networks and what's happening relative to the overall trend. And the overall trend does not have any indication of exhaustion. Okay. Especially compared to the fundamentals. So that's what I think about that. I think the same is true for ETH. Now, that being said, it's not financial advice. Nobody knows for sure. That's just my opinion. So I'm having actually a little bit of a trouble loading the prices on CoinGecko. So maybe we'll just pretend like we see the prices here. Okay, hold on. Let me see if I can actually fix I need to fix my monitor placement here, or my screen placement. It's in my streaming software. It's like fell off. So yeah, it's not. I was trying to show you the overall trend, 180 trend, year trend. Basically, the big picture is here. We're still on a parabola, okay? And I don't have, there's no real sign of the top of that parabola relative to what's happening with the fundamentals. So that's another reason I'm still pretty bullish. Okay, it didn't want to load on me. Okay, so look at some another major milestone for crypto right now. I don't think this has any bearing on crypto markets or anything like that, but a milestone that is important, and I think is something that's good for you all to look into if you want to understand crypto better. So Bitcoin's white paper was actually published 13 years ago today. All right, so if you're brand new to crypto, you might not even know what a white paper is because they're not as common anymore as they used to be. Okay, so basically a white paper is really just a, it's a white piece of paper that outlines really an idea, okay? And the Bitcoin white paper is very famous because it's not to be a really technical paper. That's more like a yellow paper where they talk about technical specifications. But it just really outlines the idea to understand a new technology and what it's about, what it's supposed to do, all that type of stuff. And the Bitcoin had a famous white paper that was like, hey, here's this Bitcoin thing. Here's what it's supposed to do. If you ever heard Bitcoin called a peer-to-peer electronic digital cash solution or whatever, that comes from the Bitcoin white paper, okay? Created by Satoshi Nakamoto. So it's 13 years old today. It's a pretty historic milestone. But here's what's really interesting about the Bitcoin white paper is it's crazy if you go back and read it how genius the original Bitcoin idea was, and how much it influenced almost everything that we do in crypto today in terms of decentralization, in terms of just the fundamental properties that decentralized blockchain should have, even on Ethereum, even on other chains that are popping up as well. So if you want to go back and just get a very good fundamental education about what crypto is about, I highly recommend at least spending some time with the Bitcoin white paper. You didn't read the whole thing, just read a little bit of it. Okay, I think any exposure to it's going to be better than nothing, because you're going to hear a lot of people, borrow ideas from the Bitcoin white paper, quote things from the Bitcoin white paper, and the more fluent you are, it'll increase your fluency in crypto. It's sort of like a religious text that's a part of the canon that people draw from all the time. Okay, so let's look at a couple different metrics, fundamentals for the space. So one thing that's pretty interesting, speaking of Bitcoin, let's see here. So one thing that people use to measure, value blockchains in the first place is looking at different metrics associated with the chains themselves, or really how do you evaluate any, crypto project, whether it's a blockchain, whether it's a Dapp, like a DeFi application, a protocol, whether it's a crypto game, whether it's an NFT, whatever. People like taking lots of different metrics that show usage statistics about those things to understand their value. Okay, because this helps them sort of value crypto projects in the first place. Now, I'll be fully transparent. We're still pretty young, in this industry, and we're trying to come up with the best metrics to use to determine the value of certain networks or projects. Okay. But I do think we can start to create multi-dimensional viewpoints of these projects to determine which ones have value relative to one another, okay? And so, you have things in the stock market like price to earnings ratios, all that type of stuff, okay? And honestly, some of these types of things were not really formalized and used widely till much later. Okay, and I think the same kind of thing is happening for crypto right now, where we're starting to arrive at some of these sort of benchmark metrics people use to value protocols. Now, let me talk about what some of these metrics are, like total value locked, fees paid to protocols, et cetera, et cetera. And one metric I want to talk about right now, talking about Bitcoin compared to other chains, is we actually just saw an interesting metric where Ethereum, the fees for Ethereum actually 100x'd the fees paid to the Bitcoin protocol. Okay. Pretty crazy. Pretty crazy. Roughly speaking. All right. So 65,776,000. And I don't actually know what the time frame here is. Let's actually look. We don't have a time frame shot, but let's see if we can reproduce any of it. So average 7-day fees. Yeah, we're still at about that same level. Okay. So part of this is trying to understand what the demand is for a network. You might say, well, it's because Ethereum's gas fees are high. But also part of that's the indication of demand. I mean, I was talking to somebody yesterday who was like, yeah, I did all this stuff on Ethereum. Several people are just like, man, the gas users are crazy. And they are, right? It's not a sustainable thing that's going to, be consumer facing forever. Okay, that's what layer 2 adoption is largely about. But that being said, this is still an indication that people want to use the network. Like the fees still show that there's massive demand to make transactions on Ethereum and use the block space. People are, making life-changing gains, buying NFTs, doing DeFi, all that type of stuff, buying ETH, staking it. So it shows you that relative to Bitcoin, which is pretty crazy. So another reason to think about this is people talk about a possible flipping, where Ethereum could actually flip Bitcoin and become the number one cryptocurrency by market cap. And I always think this is possible because there's more you can do with Ethereum, more reasons you want to use it, and therefore more reasons that the value of Ether could increase. Going back to that whole thesis about the more utility there is with the cryptocurrency to a wider number of people, and a wider amount of money, more importantly, could be reasons why you'd have something that would increase in value relative to something like Bitcoin. And the fees are a picture of that. So there are lots of other metrics like fees paid to our protocols, TVL, total value locked. I'll probably do a video breaking down some of these metrics and what they mean and how people use them to evaluate projects. Because, DeFi Pulse is a famous metric with TVL. Okay, total value locked. It's a matter of crypto locked into these projects. It looks like one of the projects got delisted or something like that. So recently we were at $100 billion, and now we dipped down. I'm not sure what happened. I have a feeling somebody got delisted. Or maybe some sort of cryptocurrency stopped being counted. Okay, so another interesting metric is that, talking about usage statistics, for Ethereum in particular. So Ethereum actually just had its first week of negative issuance. All right, so what does that mean? So basically, a couple months ago, we implemented EIP 1559 on Ethereum. So if you're new around here, like maybe you got into crypto the last month, you may not have heard about this because this was sort of all the rage for Ethereum for, most of 2021. And ever since, it happened, it's been people have been a little quieter about it, but it's actually a big deal. So basically what this does is an improvement to Ethereum where part of the transaction fees that are paid on the network are burnt. So basically, like any time that I send cryptocurrency to the network, maybe I send one Ether from my wallet to yours, I pay a fee to do that. And after this change, part of that fee gets burnt and erased from the network. Now, the blockchain itself is always producing new cryptocurrency whenever new blocks are created. Okay, so those two things kind of interact with one another. And if there's a lot of network activity, then it can basically cancel out the amount of ETH that's being created by the blockchain. And if there's a lot of network activity, it can actually offset it, and become deflationary, like negative issuance. Okay, so there's no network activity, it's positive issuance. If there's, the issuance can cancel each other out, and then it can be really spike, and then it can be completely negative. And so we see negative blocks here and there. Like if you see a block that's over 2 ETH, like this one or this one or this one or this one, then it's a negative issuance block. Okay, but you can average these things out on large time frames. And last week was the first week since EIP 1559 where the issuance was negative. Okay, completely negative. So that's pretty crazy. That's an indication that the demand for the Ethereum block space is increasing. Okay, and that's another metric to watch out for when you're talking about what is the value of Ether relative to these other cryptocurrencies, the fees being paid, the amount of ETH getting burnt in these transactions. Okay, because part of it, we're talking about the ETH as the asset itself. If you make ETH deflationary, that means there's less and less and less ETH. And if you're talking about supply and demand economics, assuming the demand at least just stays the same, which I think it's increasing based on ETH's network effects, if the demand just stays the same and supply starts to decrease, then that has a positive impact on the price. So if you have supply decreasing and demand increasing, that's an exponential equation for price increase. Okay. So now, ETH will likely not become net deflationary consistently until the merge happens. That's when ETH proof of stake turns on, and the ETH 2.0 is being built right now, gets merged back into ETH 1. And if you can simulate the merge, you can see that it becomes, at the current usage levels, which I suspect that usage to increase, that it will be negative 2.1% inflationary or 2.1% deflationary per year. So you can see the metrics here. So ETH getting created, 0.4 million ETH getting created every year, and then 3 million ETH getting burnt every year. So net 2.6 million ETH getting burned every year. And right now, 2.3, 3 million ETH getting burned every year, and 5.4 million ETH getting created every year. So, yeah. Ugh. Excuse me. Okay, so somebody says it's November and Bitcoin is struggling to even crack $62,000. I don't know how this is even called a bull run. What would you call it? I mean, if you look at Bitcoin in the past 90 days, looks like a bull trend to me. I mean, I think you have to understand about Bitcoin is it's at a very, very, very large market cap. It's over $1 trillion. So when you're talking about assets over $1 trillion, unless people are just panic selling, it's kind of hard to move the needle on the price of an asset like that. Okay. Now it gets a lot easier when you have low volume and high leverage. That's a pretty good scenario to start moving prices pretty fast. But in general, it's going to be harder to move the needle on larger assets. I think that I don't know if this person's new to crypto. They probably aren't if they had different expectations of a bull run. But for some people are new who are watching may not even know this, so I'll just repeat it. Basically, if you go to a website like coinmicrocap.com and you look at all these cryptocurrencies, okay, they're sorted by market cap. So it means Bitcoin's the number one, which means all the value of all the Bitcoins in the world is the most valuable compared to like Ethereum. So that means if you take all the Bitcoins and multiply it by $61,000, that means the market cap's about $1.1 trillion, okay? If you take all the Ether in the world and multiply it by $4,338, it's about $500 billion. And so you sort these lists and you keep going down, and it's like, okay, then the ones down here past 65 are only $2 billion, okay? And they keep going down, and it's like, these are $1 billion, okay? So they're sorted by market cap rank. So the higher the market cap, the harder it is to move the needle on price, or the more buying pressure it takes to increase the price. Okay, it means more capital, more people. And then smaller market cap, it's a lot easier to move the price in either direction, up or down. That's why people are always in search for 100x, altcoin gems, is because, smaller cap cryptocurrencies have a much easier time, with those 100x gains because, it's just a smaller amount of money. So the reason that's relevant is, yeah, Bitcoin's at $62,000, and that's actually really impressive. You need a lot of energy to move it up to $100,000. A lot more than you need. Let's just see here, to take, I don't know, some random coin here. It would take a lot more energy to do that than to get BAT to go to $2. I'll put it that way. Okay, so another kind of interesting thing when talking about crypto adoption is we're seeing lots of brands, with crypto plays, like major brands. Like we saw Burger King partnering with Robinhood to give away 2 million Dogecoin. Okay, we're starting to see things like the McDonald's. Let's just see. I don't even know if this is true. I didn't see the official source from McDonald's. I guess it is. We'll just assume it's true. I'll let y'all do your own due diligence to to see or not. But basically, McDonald's launching its 10 NFTs for the release of the McRib. Okay, so I guess the whole point here is we're seeing, more and more adoption from big brands, which is pretty big for crypto. Okay, this was not happening 2 years ago, and if any of these things had happened, 2 years ago, it probably would have, spiked the Bitcoin price by like 20% in a day, just because that's the nature of these markets. Like anytime we had any mainstream coverage of crypto, is like, space blows up, at least temporarily. And now it's kind of commonplace. So if you're kind of newish to crypto, like got in, in 2021, you might take this stuff for granted, but it was not always this way, and it probably won't always be this way. So now is an unprecedented opportunity. So play your cards right. No pressure. All right, so we got any more questions here? So what you're saying is Bitcoin will probably never hit $500,000 ever, or so I think Bitcoin can hit $500,000. So we'll see here. Here's why. Gold's got an $11 trillion market cap. Okay, so basically Bitcoin would have to 10x from its current price level to hit $500,000. So could Bitcoin surpass the market cap of gold? I think it can. And we've seen things like the Bitcoin futures ETF come on the scene. I think we need more infrastructure in place. I think we want to see more stuff like more just like spot ETFs for Bitcoin, more adoption of Bitcoin just across the board. Okay, but I think it's definitely possible for Bitcoin to hit $500,000. That being said, I don't have a timeline when that's going to happen. I'm not saying like it's going to be this next bull run, the next bull run. That's a lot of assumptions there. It's assuming that we are going to keep on these cycles, right? And that these cycles are going to look anything like people think they're going to. There's a lot of just bias about what's happened in the past before you're like totally confident in those types of things. But I think the fundamentals. There is an arc to where Bitcoin can hit $500,000. I'm not saying it's going to happen, but it's very, very possible. It's the stock to flow model on Bitcoin. Yeah. Please don't compare Bitcoin to gold. Gold is outdated compared to BTC. Well, the whole point here is looking at the market caps of existing assets that have somewhat similar value propositions, okay? Because, well, what if Bitcoin had to be worth $100 trillion to be worth $500,000? I might say, that's probably not going to happen anytime soon, maybe in our lifetime. That's the reason for comparing Bitcoin to gold in this case, is to actually look at the market caps and try to say, is this feasible? You got to think about what's the total addressable market for Bitcoin, all right? So if the total addressable market for gold has caused gold to be worth $11 trillion, then there's very likely a similar size market out there that could cause Bitcoin to be worth $11 trillion. So as gold hasn't moved in years, yeah, gold has been a pretty horrible asset to hold over the past decade. Somebody said they were excited for the NFT Masterclass. So yeah, we are going to have the NFT Masterclass this Thursday. I'll put a link down in the description below. You can sign up for that. We're going to show you we're actually going to create an NFT live inside the class and drop it. Okay, so we're going to do a generative NFT, show you how to create the artwork, create, a lot of different NFTs just by kind of randomly mixing different attributes like the really popular NFT projects out there. We'll do that. We'll drop it live. Make sure you sign up with the link down below. I'm going to go ahead and wrap up for today. As always, if you like these videos, subscribe to the channel, turn on notifications. You'll find out about these live streams whenever we go live against Monday through Friday on this channel. And if you're as fast in these videos as I am, you want to get your hands dirty, how can you get started today? You can go to my YouTube homepage. You can find my free courses there. They're like Udemy courses, but they're totally free. And if you like those and you want to take the next step, or hey, maybe you want to take a master shortcut entirely, I can show you become a blockchain master step-by-step start to finish over at dappuniversity.com/bootcamp. You really don't have to be an expert to get started now. I've helped people with zero coding experience become real-world blockchain developers in a matter of months. So that's all I've got. And until next time, thanks for watching.